Let's dive into the current structure of the market, and we are very optimistic that trade deals across all global powers will be reached. As trade deals are reached, we continue to see a resilient economy. We continue to see US dollar rebound. And if you look critically, you will see that in the beginning of the month of July, we have seen the 10-year bond yield suddenly recover from 4.193 to 4.45 level on 17th, and the 10-year Treasury bond yield continue to show strong rebound, indicating resilient economy. And as that continues to unfold, we see the dollar index as well picking up. In my chart earlier this month, I made mention of a dollar index sitting on support level, and that analysis, that bias had held firmly. And we have seen that the DSY has continued to upswing. And this will continue. As these characteristics continue, we will see that AUD USD, Euro USD, GBP USD, USD ZAR, USD CAD will continue to face reverse price action as the dollar index and the 10-year bond you continue to make that upward swing. So let's dive into the structure. And this is a quick snippet in, and we want to save time. Now you see from a structural perspective, we have a descending trend line connecting the month of that was the month of April 2025. We have ROS1, ROS2, ROS3, ROS4, ROS5 break of ROS level, and price came back on retest. And shortly after that retest, we have seen price move back upswing to go meet up another broken structure at this level. After we had a break of structure here, price came here retest and came here another retest and gave us another retest and same price tanking again. And that tank came down, broke that descending trend line. After break of that descending trend line, if you look on your line chart, you will see a strong structure here where we have had our ROT after break of structure, and that strategy, that price action stood firmly. Then we have seen that dollar buying resumed. Dollar buying resumed after break of that supply roof. Break of that supply roof returns here as RT and as SR. Support become resistance on break of structure 1, and it came back again. Support become resistance on break of structure 2, thereby invalidating a breakout from a descending trend line on technical. Without this structure at this level at 96.663, the dollar index would have been tanking. But thank goodness that buyers came to the rescue and leveraged on that condition after break of a supply roof and retested on that floor twice, and we have seen the dollar rebound. And that dollar rebound will continue. And I'm seeing, based on the performance of the 10-year bond yield, that the US dollar could recover from its drop below 100 mark. I'm seeing that very possible. And one place where I see that will be tested is if we manage to break here the 98.619 level on 4 hours time frame. If we break that level on 4 hours time frame, then I'm optimistic that the index will continue to upswing until we have the index approach close to $100 mark. If we get this, then the next place we're heading to will be around 99.44, heading into 100 mark. And a break above this level, we ultimately see the dollar index heading into 102, 103 level. This is my perspective based on the structure of the market. My duty is to interpret the structure of the market. What the market does is based on the fundamentals and of food. And this week we have very strong fundamental data for today, for tomorrow, and for next tomorrow. So traders must watch out for fundamental data prints. As all these data prints unfold, you see that market dynamics changes. And we continue to see trade talk agreement reached between US and other world powers, EU, US trade talk balanced, and we see China, US trade talk balance. So as we continue to reach this agreement in trading balance, we see that the dollar index continue to rebound. And we see the 10-year Treasury Yield, which is the benchmark investment key watch in the strength of a US market. As we see the 10-year Treasury bond yield continue to rise, we see investors are having confidence in United States dollar. And I will tell you for sure that unemployment in US will continue to drop following the ICE raid on illegal immigrants in the United States. And as we continue to have these rates, we see that more and more of unemployment data report will drop. And as more unemployment data continue to drop, we see strong rebound, and we see Federal Reserve continue to watch as these are tools the Federal Reserve use in when making the decisions for monetary policy. So this is what I see, and at the moment I'm seeing a push into 103, 102 level. If we can clear 99, 100 level, if we clear 99, 100 level, we see dollar rebound into 103. As you start the day strong. And I want you to continue to be resilient, continue to make out time to study the structure of market and put time into studying rather than being speculative. Watch the market and follow the market. For you cannot tell the direction of the market accurately, and no strategy supersedes the other. Every strategy is struggling. I wish you a good day. Bye bye.